Hello and welcome to Paper Traders, a show where two average Joes try to beat the market. I am your co-host Eric, and I'm here with Danny Mac. I also like to remind you that we're streaming on all your favorite platforms, including YouTube, Periscope. I don't know, there's too many for me to just list off, but be sure to check those out and leave a comment, subscribe, everything else, so we know that you're actually watching and what you want to see. With that, I'd also like to mention that currently we are streaming live, so we get to see all your comments, questions, and everything else right here in front of us. So if you have something you want to mention, or is there something you want to hear, or somebody you want to hear from, let us know, and we'll get them in here, or we'll address the question off air.
Yeah, you can always think of us, I guess, as your extension to the experts here in Zacks universe. We have a multitude of them that cover pretty much everything. So we always like to bring them on and get some expert advice on what's going on in the market. Today it's just me and Eric. We're going to kind of run through some
quick news stories.
Yeah, there's just a bunch of tidbits kind of
earnings.
Right. I mean, we're in the midst of earnings. Let's just jump right into it, I guess, because we had Facebook earnings and Apple earnings last week. Both of them beat. Pretty good news on all fronts.
Which surprised me, actually. I mean, Facebook, with all the trouble they've been having, they're beating earnings.
Yeah, I mean, I think it's just that they've been kind of being shadowed by that bad news and all of the regulations that are going on. Mark Zuckerberg and Facebook seem to be very open to all regulations. They want to be regulated. They don't want these problems. They want to continue to operate in a smooth fashion like they did for the past decade.
But I mean, even beyond that, they had the problem with Lira. Lira is now basically just dead.
Oh, that's their Bitcoin or their cryptocurrency, right?
Exactly. Pretty much every bank pulled out of that.
I have a hard time understanding why they're getting into
why they
it.
Need their own. It seems like it's the trendy thing to do. Everybody's got their own crypto. Don't you have your own cryptocurrency? I do.
Yeah, it's called the Mac currency.
Yeah, the Danny Mac.
I don't get it. Yeah,
tossing those Macs around.
I feel like I thought that most companies or major corporations kind of saw this crypto thing as its background, which is the blockchain. So seeing a company like Facebook opening up to the cryptocurrency and making a new one, I don't get it. I don't see people getting value out of it.
Well, I mean,
I
even
could be missing the point.
Even if they use, let's go total conspiracy theorist on this. So let's assume that Facebook is an evil corporation, right? And they want to go and take all your data, right? And figure out the DNA of how you think, essentially. Now, imagine if they threw that in the blockchain and then were able to go and actually, copyright that or, get the rights to it or own it in some way, shape, or form. Wouldn't that be kind of scary?
I was just going to say, now you're kind of terrifying me a little bit.
And that also ties into the terrifying end of their TV portal that they have that just came out. And I will tell you, the reviews I have read,
not good?
No, they're terrifying. Basically, I had read one in a tech news magazine, and it basically had said that the device itself is spectacular, but given Facebook's, ability to basically steal data and spy on you, that nobody should have this thing in their house.
I mean, I'm not going to be buying one anytime soon.
Well, come on, let's be honest. It's a silly idea. What do you need another camera for on top of your television? I'm pretty sure everybody has one in some way, shape, or form nowadays with smart TVs. So,
I mean, it's not like people were running out to go buy webcams to put on their TV so that they could have conversations. So
I thought
the whole idea, again, these ideas that Facebook is implementing for their company, I don't get them, and I don't see the benefit in the long run.
And that's what I'm saying. It's crazy that they actually went and beat earnings with all these big dumps they've been taking, I mean, that portal ain't going nowhere. The Lira ain't going nowhere, but somehow numbers are up. It's like the Tesla story.
Yeah, and people are still buying iPhones and all the Apple products. So they're doing well, too, especially with their services. And then we have, we have Square this week as well. Today, reporting after.
Which that directly affects you and your portfolio here.
It does, and I'm actually hoping that we get a really good earnings beat because they tend to react pretty positively when they get some good numbers. And I'm hoping that there's going to be a little bit of a gap fill here. They hit, I think it was 101.15 was their record high last year. They're currently trading around $62, so it's a big gap down they had. I think just Wall Street was getting a little nervous with the, I guess, competition that's in the market, but I think
It's heating up. I mean, even Alipay just went and opened up their doors a bit.
Yeah, I feel like they have a little bit more of a leeway, especially on the international markets. They've also, like we've talked about in past episodes, have opened up their doors to cannabis retailers and CBD retailers. So now that they are able to actually do credit card transactions, which is a huge step for any kind of company that is doing mobile payments. So I think it's just a good company overall, and I'm hoping that the numbers come out. They're expecting 20 cents per share on $1.19 billion in revenue, so they're still making some good money there. But we'll see. Yeah, we're just gonna have to kind of wait and see what happens after the close today. So
Yeah, there's lots of earnings news. I kind of feel like those are the big ones that people probably care about.
yeah, that one and Disney as well.
Yeah,
So.
Disney, that's another big one, especially given that the Plus comes out soon. So
Yep, November 12th, I will be starting my subscription right away. I'm pretty sure there's going to be a lot of people just like me jumping on board,
Just
wanting
to
to
see
kind
it.
of see what's going on, and to see if it's going to be worth to kind of stick around.
I'm
Yeah.
tempted. I'm sure they're gonna have a free trial membership thing. I might dip into that just to see what they have.
Yeah, because I mean, Apple with their Apple, I forget do you know the name of the service?
I don't
Their
know.
Apple streaming service.
It's gonna be womp womp womp. That's what it's gonna be.
Well, I mean, we were talking about it yesterday and saying how smart of a marketing idea it was for them just to kind of give it away for free.
to Apple users though.
Yeah, well, exactly, because you're going to be buying Apple products, so they're still going to be getting revenue somehow, and then they're kind of locking it in. Like if
But
you
what are they
watch
gonna
a
have for
show,
content though?
well,
I mean,
hypothetically, say you watch a show on there, right, and then the year comes up and you're like, oh shoot, I have to now renew if I want to continue watching my favorite
just
show.
following
So,
along with everybody else, just so you know, it's Apple Plus.
Apple Plus. Everybody's going with the plus.
With the
plus.
plus plus.
Because there's so many.
It's kind
of
of like
them.
for a while it was like I everything,
Yeah.
I this, I that. Now it's Plus.
Yeah, well, yeah, we're gonna have to watch and see. Disney is expected tomorrow, Thursday after the close. They're kind of gapped down a little as well. They were at a record high of $147.15. They're currently trading around $132. Me and Eric are both paper
Holding it,
trading
yeah.
this one.
We'll
Just
get into that later on though, because I got
Right.
other ones to talk about once we get into the battleground.
Exactly. And they're expected to have 94 cents per share on $19.29 billion in revenue. And just don't forget with this, I think, earnings call, there's a lot of different sections of Walt Disney. They have their museum, or not their museums, but their
Basically museums.
yeah, I mean, you could call them that if you want, but they're amusement parks, the movies, the list literally just goes on and on. So you have a lot to kind of look out for on this earnings call. But yeah, me and Eric will definitely be watching out to see what happens with that one. So
I'm just gonna. I don't know. I was interested to see what Apple had with their new Apple Plus, and the only thing they seem to be really showing off is the morning show, which has
What
got
is-
Steve Carell and Jennifer Aniston.
let's take a look. What do you got? Oh,
and C. So
yeah, the guy from Aquaman.
Aquaman, the biggest bomb ever. So we know how that one's gonna do. Dickinson. I don't know. What
Not
that even
familiar.
was. For all mankind.
All right.
Snoopy and this looks very riveting. Let me tell you, Danny. I am just chomping at the bit to watch the Elephant Queen.
Yeah, the only one so far, the Steve Carell, just because of who he is and his past. I really like him stuff. Maybe
Ghost Rider. Tell me this doesn't look like a
spin-off?
direct rip-off of Stranger Things.
That's exactly
They even
what I
got
thought when I
this
saw
kid
it.
who kind of looks like the chubby kid with no teeth. Like,
Yeah,
whoa.
that's funny. That's awesome.
Oh, yeah, the
Well, they do have a lot of
Servant.
content.
Oh, I'm not
so-
Shyamalan. I'll be honest. I like him, but
Well, okay, so there might be some hidden good stuff in here.
Maybe.
So I think by getting that free
Either way,
trial,
these guys are dipping their toe into a battleground that pretty much is going to be either dominated by or by Disney or Netflix. I mean, there's no way they can put up enough content to even fight those guys.
yeah. I mean, like we said in another episode, it's a crazy streaming, I guess, competition world going on
It's
right
a
now.
battleground. It's like PUBG right now when it comes to streaming services. They're about to all jump out of their plane and figure out who's going to be the last one standing.
I think it's just kind of the floodgates have been opened. It's going to take a couple years for everything to kind of settle down and let people kind of decide where they're going to let their money lie and what shows they're going to watch. I mean, HBO's coming out with one that, in my opinion, is a little expensive at $15.
Oh, yeah.
Disney's is going to be $12.99 with the Hulu.
And
then you have
ESPN.
Netflix at 12. It's the list goes on.
You
the
and I talked
prices are
about
going
this. It's
up.
like $150 to get all these
it's
for a
very
month.
expensive. So I believe people are going to kind of pick and choose sooner or later. But there's going to be a trial run where people are going to jump on board just to see what's going on.
Or join the true cord cutting master race and ignore all that and come to the dark side.
Eric can run us through that in another episode. I think that's.
I don't think I legally can. I'm pretty sure that we'd have problems if I showed people how to go about that. But yeah, no, come join the dark side, Danny.
No,
Save your money and spend it on other good things.
Yeah, well, I'm the one that kind of jumps in and out of the streaming services depending on what's kind of going on. Like with HBO, the Game of Thrones, I was in and out. Netflix is kind of the only one I stick with, only because I don't know, it's just like on autopilot at this point. So I don't know, they got me kind of hooked and stuck in.
So we got a question here from Neymar Magic. I'm gonna apologize if I mispronounced your name, but Neymar is asking about Roku because apparently they're gonna be also doing earnings today. So
Roku
let's
earnings
take a look,
too.
see what Roku's been up to. Roku, I feel like, is the unsung hero, but in the game of, we're gonna say, corporate cord cutting.
Yeah, well, they're
I think
kind of
they're
bringing everything together.
Well, I think they're kind of going to get buried at some point. I mean, you have to buy a Roku, and now most TVs basically have a Roku built in. So
I mean, yes and no, right? I mean, I have.
They have Roku TVs. I'm not saying they're not getting involved in that market, but I feel like with most smart televisions, the idea of needing a Roku is almost unnecessary. You have all these built-in apps that you could just sign right into.
I definitely agree, but at the same time, I have those smart TVs, and the applications and the like processing or whatever they have in those TVs are the bottom grade that you get, and they're terrible. They don't work all the time. They take forever to load up. I don't know.
Well,
That's just
you
my
also
experience.
have like the Amazon Stick. The Amazon Stick is pretty much the direct competitor.
Right.
I know that they're fairly equally priced. I mean, it's not like the Amazon Stick is super expensive, and it's not like the Roku is that much. Much cheaper.
They're like the cable box for the cord cutters to bring everything into one place so that you don't have to have.
We're gonna coin a term. We're gonna call it corporate cord cutting. As a purist, I can't handle that. When people are like, oh, I'm cutting the cords. Like, oh, you're gonna be paying $150 a month for everything else that you were basically paying for cable. Like, that's not cord cutting.
Yeah. So I mean, from what I'm looking at on that chart, Eric, it looks like they've just been on the
earnings.
up.
Yeah, earnings are looking good, but look at this dip here in 2020.
Yeah, it looks like.
It looks like that. I'm gonna go look and see where these have kind of dropped, but it looks like 2020 is looking down, but 2021 is looking up. So
yeah, well, I mean, they're right in the line there at the earnings.
Let's see who's saying what. I gotta go to another portion. Let's take a look at the full earnings, detailed estimates. There we go. That'll help too.
What's its current? It's a rank number 1, so earnings are coming out.
That's a rank
positive.
1, value of an F, growth C, momentum D, but it's a VGM of F. So I mean,
so not the best style scores.
No,
which isn't always good.
It's not always good, not always bad.
Coupled with a 1. Usually, you want to have some good VGM scores along, coupled with a strong.
We don't need them, but it's kind of like
it's a more
like
positive reinforcement.
Yeah, I would say it's kind of like the cushion. It's like the what's the word? It's like the training wheels. You know that you have them there to help you. Yeah, but sometimes you know something, you gotta just go with your gut.
Yeah, and I mean this is a big trend right now. People are on the streaming things, so this isn't a bad play. I mean, with the earnings coming out and the estimations going up,
I don't know, man. I'm looking at these. Look at the earnings estimates for current quarter, next quarter, and then current year. I mean, they're all negative.
They're struggling to get a profit right now.
Yeah, they're all negative. So, I mean, Neymar, was it? Yeah, Neymar, I'm going to say that if I were looking at this, just over the quick couple of seconds that we looked at it, I mean, just the earnings estimates alone being all negative, and not just negative by a couple percentage points. We're looking at negative 200% almost across the board. I would probably not get into this unless you happen to believe in something and this is a chance for you to buy in low
Yeah.
and sell it next year when it's looking like its earnings chart is going to be a lot prettier.
Yeah, and to me, in my, humble opinion, I tend to like to play it safe. I mean, I have a dividend aristocrats in our paper portfolio here, so it kind of shows how I like to play the market. And I would always like to see kind of how the company's performing after the fact of earnings.
Well, because you're always going to have to see the dip or raise. I mean,
Yeah,
either a bunch of people are going to see that it went down and get in because they want to get in low, or it went up higher and they think there's still higher to go. So
yeah, but like
I
Eric
don't
said,
disagree
you got to
with you.
follow your gut. So.
Yeah, follow your gut. But me, just on this quick couple seconds we're spending on it, I'd probably be out on it. I mean, unless, again, you're going to buy it low because, like I said, according to what we got for, the EPS surprise, looks like it's going to be down for this year. So I mean,
Totally up in the air with the streaming world that's going on right now. In my opinion, it's just kind of crazy and saturated. So.
and thanks for watching, Neymar.
Yeah, thanks, man. Thank you for the question. And we'll definitely kind of pass that along to one of the experts here and see if we can get some more kind of analysis. Obviously, they're going to report before our next week's episode, but maybe we can break it down for you and kind of see what's going on and maybe if there's some, profit potential in the future. So
Go with your gut, man.
Yep.
If you think that that's a solid win and something in there is speaking to you, then work it.
Yeah. So moving off of earnings,
Let's just get into some basic news.
Yeah. You want to touch on the fun stuff, or you want to go on?
Well,
the business
I've
side?
already got Uber up here right now, so Uber share
Oh, yeah, the
slide ahead of
lockout.
lockup expectation. Uber started out as this really cool. What's that line from Batman? You stay alive long enough to see yourself become the villain.
I don't.
And man, Uber has just done a great job of that. They used to be this really cool company where just getting a ride share in general now is synonymous, like Kleenex. I'm going to get an Uber. Nobody says I'm going to go get a Lyft or anything else. I'm going to Uber.
It's totally a household name now.
Right. And they were everywhere especially when they first came into Chicago. I was super excited because if anybody's ever tried to get a normal cab in Chicago, it's
it can
obnoxious.
be a pain. Yeah, it can be a pain.
So I was super amped and I got on board immediately and I started using the service and it was great. And then it seems like probably under the change of their CEOs that they just kind of lost their way. Instead of focusing on getting people around and, really owning that, they kind of went all over the place.
Yeah, well, I mean, they're literally a software company, in my opinion.
Oh, definitely. Definitely.
They created an app where people can use it to connect with entrepreneurs who are driving their car for others. I mean, that's basically what it kind of
allows
is.
anybody to be a cabbie, essentially. I mean, it's a way to supplement your income. I mean,
Yeah.
pretty much every Uber driver I've ever spoken to never did it as a full-time gig, unless they were retired. I will take that back. Older people really enjoy driving Uber full-time, but most people that are working another job just kind of decide they can get a couple extra bucks by driving. So, I mean, it's a pretty cool idea. But they went into, the self-driving cars, and they were
that's
tracking
where I
people,
think
and
they can kind of benefit from what they're doing, because I feel like the ride sharing isn't going to be their save-all grace to get a profit out of this company. They're going to have to use their services for other stuff like freight.
I think that their software, their algorithm and logistics is what's really going to get them money. If they, like you were just saying, if they could apply that to, shipping and get packages moving faster, then UPS might buy that software or want to buy the software. But I don't see them getting out of the bad guy thing. It seems like every time you turn around, Uber's getting in trouble for something.
Yeah, and when you can turn around and just take a Lyft, I don't know. It's a scary business to be in my opinion, especially when I guess investors and the general public can turn on you so quickly and use another service.
Or even the government. I mean, in California now, if you work for Uber and you work X amount of hours, you're considered a full-time employee. You're no longer just a contractor. So you actually owe them benefits. So this whole sharing economy, I think, is going to really go through some sort of
and it shows
revolution.
on the stock. I mean, the stock's at an all-time low of 25.58 in intraday trading the other day.
You showing the stock right there? Should I pull it up here?
You can pull it up there.
Yeah, Uber. I don't even remember the.
But
do you remember the ticker?
UBR. Is it UBR? Just the straight up Uber.
That's what I thought too, but didn't come up with anything.
All right. Well, I mean, so right now, what the big scare is, what everybody's kind of talking about with Uber, is that their lockout is coming
No,
up.
no, there it is. Uber.
So a bunch of pre-IPO investors are now able to actually sell their stock,
which are probably dying to do.
I don't think so, because they're probably underwater right now. So
Maybe.
why would they want to just get out with the first chance they can? That's not, in my opinion, the smartest investment move. I mean, wow, look at that chart.
Yeah, that chart's
Holy.
ugly.
Holy, talk about a hype on the IPO day.
But I feel like a lot of these tech companies, especially the ones that are overhyped, this is what happens. I mean, look at what happened with WeWork.
Oh, yeah, that was a disaster.
Yeah, I mean, I feel like some of these companies are overvalued to begin with just because of their popularity. And then all of a sudden, once the S hits the fan, so to speak, all of a sudden you get this wake-up reality call of, oh, wait, these guys don't actually really produce anything.
Yeah, I mean, Uber's not producing a profit. It's a little scary. Yeah, I don't see this being too big of a volatile spike on their stock, just because, like I said, I think a lot of people are currently underwater with the stock at all-time lows. So yeah, it's just one of those things where yeah.
I'm not interested.
I'm not either.
I'm going to stay away from it because I feel like that whole sharing economy thing is very short-lived until it starts getting regulated, which is exactly what's kind of happening with Uber.
All right.
Yeah, we got style scores of FF. A for momentum, because there might be some left, but yeah, VGM scoring, it's a hold if you already have
None
it.
of that looks good to me.
No.
It looks like it actually came up off of its all-time highs there. It looks like it was trading at 26, what was it, 26.46, something like that. So 94, like 26.94. So
that's it. Yep. So on to the next news bit, just for S's and H's, and I guess, yeah, I wanted to swear, but I shouldn't. But
Eric is being conscious of what he's saying.
I got nieces, man. Let me tell you how hard that is.
Oh yeah, I can tell you. I'm right there with you.
So Microsoft has tested a 4-day work week, and they're saying that production went up and everything else. And I'll be honest with you, I read the headline and I didn't read the whole story, so I'm not quite sure exactly what went into it. But my assumption would be is you work more hours during the day to produce a 40-hour work week in 4 days versus 5.
I think that so it was a Microsoft division in Japan, I believe, and they saw the 4-day work week turn 40% more productivity, which is, I mean, that's.
But how do you?
Huge
so how,
turnaround.
that's what I'm saying. What were the how was it set up? So did you have to still work 40 hours in the week, so you'd be working 10-hour days?
I don't believe so. I think it was just
They're
normal
just
work
working
days.
8-hour days?
Yeah.
If anybody out there is watching this and happens to know what the actual, because I only had a video story, so I didn't really get too deep into it. But if anybody happens to know how they set up this experiment to see a 40% increase in production on still working what would have been what? So that'd be 32 hours?
Yeah, I mean, for just a quick synopsis here from Market Watch, I'm reading their article in quote here. They tested a 4-day work week in August, and the company said productivity jumped 40%. Employees took summer Fridays off. The program was called Work-Life Choice. Work-Life Choice Challenge also encouraged staff to reduce the time they spent at meetings and responding to work emails. So apparently they didn't want to talk to anybody. They just wanted to get their work done.
Well, I
and
mean,
get out.
okay, anybody who's been in a corporate environment can tell you how much time is wasted over the course of a day based in just, meetings. Like it's insane. Sometimes you have meetings that don't even necessarily need to happen. So that's going to already pick up your pace.
Yeah. But it's interesting because not only Microsoft is doing it, but it looks like Shake Shack did it. Looks like they tested it in Las Vegas and have now decided that they're going to expand their 4-day work week for managers and kind of move it towards other store locations. Looks like there's a New Zealand company that also was doing it. So, I mean, this isn't new, I guess. This is kind of like a thing a lot of companies are testing.
I'm looking at NPR, and I'll be honest with you, they're not even showing anything for the hours they work. So I'm assuming that they...
Look, I'm sure they had to get their job. They had to get their jobs still done. So I'd imagine there was a little bit more work being done, or maybe with the cut of like meetings and all that stuff, they were able to cut the hours down as well.
But you wouldn't be able to. Think about it. You still get paid on an 8-hour day.
Well, if they're not, where they could be, I'm assuming their salary, right?
I didn't see that addressed. Did you?
Well, I mean,
Either
I
way,
don't know
this is a
how-
long story that we don't know the details of. We just thought it was kind of funny because, of course people want
4
days
work
work weeks. Of
but
course.
the 40% jump, that's huge. So it's kind of like
Again,
enticing, not
is
only
it
for
though?
the employees,
Is it though? If
but for the
you
company.
is it though? That's the thing. Unless you know the parameters of what they set, then it's not necessarily that good.
I don't know. I'd be curious. Yeah, because again, I'm reading.
We'll get
these
back to you
articles.
on this.
There's not a whole lot of
There's no details.
in-depth
There's no details. If you're working a 32-hour week, well, I mean, the company is going to save some money. So, I mean, they might look at that as a production increase. Who knows how they're actually qualifying that? Anyway, Walgreens explores going private and what could be the largest LBO in history. This actually kind of isn't that big of a story to me, only because Walgreens, I feel, is kind of losing ground to CVS. And the bigger story to me is that CVS is teaming up with Amazon to deliver drugs.
I want to know who's going to make the $55 billion purchase of Walgreens to take it or private.
I'm sure it's going to be
big
the board. I'm sure the board of the company is probably just going to buy in and take it over.
I will be curious to see if it happens. I mean, they said it's just rumors right now. The company won't actually comment on this, so it's one of those things that people notice them looking into firms to see if they're able to do this.
Oh, actually, it looks like one of the firms looking at the deal is KRR. I don't know who they are, so
I am not familiar with them, but
KRR
we'll
and Co. Not much help. CNBC telling me who they are, but yeah. So apparently they're going to buy in. So. I don't know. Not that big a story again. I think the bigger story is Amazon taking CVS on its wing and going, hey, we'll deliver your drugs for you.
Yeah. I mean, dude, CVS, Aetna, I mean, they're making moves.
Yeah. I mean, I really hope, again, we've talked about Amazon taking on the, pharmaceutical industry in general. I really hope they don't do that because I can imagine the regulation and everything else would come in. I'm sure at that point people start looking antitrust, but
they want to get into everything.
Yeah,
let's just admit this. Jeff Bezos wants to take over the world.
Oh, for sure.
He's trying to do
And that's
it.
why I'm saying I'm sure the minute they try to step into that too far, this is probably them testing the water, see how much they can get away with.
Yeah,
but
who knows?
I doubt that they would be able to get away with that for long. But them going and getting into that is a good deal. I guess with that, I mean, the only other really big story is Xerox and HP going potentially to merge. And with that, I kind of guess this is just a story because those are two dying mediums, and if they're gonna just do it to save money, cool. But if any of you guys are holding it, I would GTFO right now.
Yeah, I mean, well, Xerox to buy HP, I think, is a good move for them. I was reading it'll actually cut a whole bunch of costs, equaling up to almost $2 billion. So, I mean, for those two companies to be able to do that.
This is a Sears story, in my opinion. This is a dying medium that just doesn't have any place in this world anymore, and they are just trying to keep their head above water by combining.
People are still printing. Businesses are still printing. Our company's still printing. So, I mean, it's still a thing that exists. To kind of show you the market caps, Xerox has a market cap of $8 billion, while HP is sitting at $27 billion. So quite a big gap there. It kind of shows where the real money is. So obviously, there's not a huge need for printers and copiers as it used to be. More need for computers and HPs, and businesses will continue to need those things. So, yeah.
Okay, well, I think with that, it is time to get into the battleground.
Yep.
Fighto! Love that little thing. All right, so paper traders, watch list, we've got all kinds of stuff in here. There's nothing really that I'm going to really move on at all personally. I'm just kind of showing it just so we can show people what's going on here. Take two.
Quite a bit of a list going here.
We do.
I like it.
We do. Take two, though, is where I'm going to focus on my part of the battleground today. Take-Two actually released Red Dead Redemption 2 for PC yesterday to mixed reviews. I mean, there were a lot of bug issues, apparently.
Dude, that is probably going to be a thing for the next couple months. To fix a video game takes so much time and back testing and all that. I mean,
it's got to be compatible with all the different chips and everything else, because everybody builds their own machine versus consoles. But
yeah, I mean, for example, because I have a computer at home that I built, I had to do a whole new drivers and stuff because they released that game. I guess they had drivers for NVIDIA.
Yeah, specifically come out yesterday.
Yeah,
yep.
So it was very in together, and I didn't play the game, but I still had to get the drivers and stuff. So yeah, I mean,
yeah, NVIDIA props to them for jumping in and doing what they could to help it go smoother for Take-Two. But with those mixed reviews, it seems like the stock is down a little bit today. We are down, especially from where we bought in. We're down 33 or 28 cents.
That's
So
not bad.
it's not bad, but I am hoping that the sales of the game project it up over, wherever it should be tomorrow. They announced tomorrow. So for those watching and those that are following these portfolios, Take-Two was a position that I took to only hold until earnings season. Now, Danny talked about how post earnings it can go up. Me, I am probably going to get out kind of quick because this is a pretty volatile stock.
Yeah. I mean, it's one of those that I feel like the stocks play off of their releases and stuff like that. I mean, the game is incredible. I played it on the PlayStation, and I loved it. So, I mean, I'd imagine that the PC folks are going to love it just as much. But, yeah, those issues that they have, I can definitely see it hindering and maybe...
But they already got your money. That's the good part. So I'm hoping that's
what I was just gonna say.
Yeah,
they already won.
I'm hoping tomorrow Take-Two goes, yeah, we had 20 billion people go and buy this game, so earnings are up.
Yeah, I mean, we'll see, because I'm not gonna buy it. I played it on the PlayStation. I think one and done is enough for me. So we'll see. I mean, it's got a whole open world concept, so it's one of those games you could probably play for a long time and keep players interested. So.
Yep. Disney Corporation obviously announcing soon. That one I'll probably hold on to for a bit.
Well,
I think it's probably till Christmas season because Disney's got the new Jedi movie coming out, so I feel like that'll be a big mover as well.
Yeah, I'm hoping for a jump up here. We'll see what the earnings tomorrow and Thursday. So,
and those are the two that I have that are low, other than Matrix. Matrix Services seems to be up and down all the time. I feel like come summer season when that comes back up, which it will, I will probably hop out of that one and take whatever I got for profits because it's always just down by 78 cents. It's been down for a while now, and.
Yeah, my portfolio is literally pretty much flat from the last time we looked at it.
You had that nice showing from Callaway, though.
I don't own Callaway. We never.
Oh, that's right. You never added it?
Yeah, we never actually took the jump. We missed on that one. It kind of popped on us, and yeah, we missed it, folks. But that happens. But we can't dwell on those. So.
And you're waiting on Disney, just like I am. It looks like.
Yeah, we're on Disney. We have our Pro Shares Dividend Aristocrats, which I love. It's a nice easy play. We bought on the dip of GW Pharma. And then we have Square and AT&T that have been pretty flat.
Well, AT&T took a pretty big hit yesterday.
Well, I'm doing pretty good. I bought into the stock relatively low. Let's see, 34.42, and it's currently sitting at 39.11. So not a bad little profit there.
Oh, I was just saying in terms of the corporate smackdown they got for throttling people.
Yeah, the $60 million
$16 million fine.
Yeah, well, I don't think that goes over well with people when you're telling them they have unlimited
and then
data.
They don't.
And then, yeah,
I agree.
We're going to back that off a little bit.
Yeah,
so.
It's insane. But overall, profits aren't bad. And, we're doing good for two average Joes trying to beat the market.
Hey, we're learning. And we started in a pretty crazy time in the market. It was down really low. So, in my opinion, I think we're on pretty good, solid feeding here.
Yeah, everything's going well. Guys, be sure to subscribe, and comment. Let us know who you want to see. In fact, real quick, let's go through who we got. So we got Tracy Reineck, who does value. We've got Dave Bartosiak, who does momentum. We've got
Nina Mishra
does ETFs. Yep. Then we've got what?
Kevin Cook with the healthcare.
Kevin Matris, who does
options,
pretty much options and everything else.
Yeah.
Brian Bolin, who does income, right?
He does, that, and then the $5 under stocks. He runs that portfolio. He's really into Tesla.
Yes, he's a big Tesla guy.
He's a huge Tesla guy.
But let us know what you guys want to see, guys. We can get any of these people in here. We're just kind of looking to help you guys educate yourselves as much as we're educating ourselves.
Yeah, we're learning here. So.
And while you're educating yourself, please be sure to go to Zacks.com/promo, where for the next 30 days, you can get Zacks Ultimate for only $1. $1 gets you access
to everything,
to every single portfolio that's open, including portfolios that have been closed to the public.
I'd say that's worth checking out.
It's worth checking out for $1. So Zacks.com/promo. And with that, folks, I think that does it. So get into your comments. Let us know who you guys want to see next week, and we will see you then.
Later.